It's Brian Preston, the money guy.
All right, so we get a little bit of leeway on the down payment. That's there. That's kind of always been there. That's always been our thought process. But this time is a little unique. And one of the questions we keep fielding over and over and over again from the audience is it ever okay to go over 25% of my gross income? If you've been listening to us for any amount of time, you know that we say when it comes to your monthly housing or monthly service on housing, your principal interest, taxes, and insurance should not exceed 25% of your gross income. Well, a lot of folks are reaching out to us saying, man, I can't do it. In the place that I live, that's unreasonable, that's unfeasible. My rent doesn't even fall into 25%. So are there ever times, or is it ever okay in this unique and special environment that we are in, is it ever okay to go above the 25%?
Well, I'm kind of happy that we've got this to cover, because this is finally going to give clarification. We've talked about this on several of our Q&A shows, and I think we've done a good job of explaining the grace and the flexibility we have. But today we've actually given you some guidance, some questions to ask yourself, because I think the answer in the short is yes, you can go over 25%. But you better do your homework. So let's talk about that homework you better do to make sure it's okay to exceed 25% of your gross income. The first thing you have to do is you have to be really realistic with what is your income trajectory.
Yeah, it's not uncommon when we see someone start out in their career field. Maybe they're an engineer or an attorney or fill in the blank, and it's likely that they're going to have a higher income in the future. And they say, well, man, I want to buy a house that I can be in for 5, 7, 10 years, but realistically, I know that my income 5, 7 to 10 years from now is going to look very different than today. Is it okay if I stretch because I know what my income is going to go into? And our answer is cautiously, yes, but you have to have a realistic view. Brian, I know you have this as well. I have tons of friends, and every time I talk to them, they tell me how much money they're going to make next year because this business idea they're going to start and this great thing they came up with, and they just started selling these supplements, and they have all this cool stuff that they're going to start. And I'm like, whoa. Maybe, but is there a high probability that your income expectations will be met? If that's the case, it's okay to stretch above the 25%. If it seems likely that the income that you're at right now is going to be roughly the same income you're going to be at for the next 3, 5, 7, 10 years, I would start to get very, very nervous and uncomfortable about telling you to stretch too far above that 25%.
Well, yeah, I mean, the entire purpose of the 25% guidance of your gross income is to make sure you are life rich versus house rich, life poor, and that because that's the real risk you have there. In your example of what you just shared, if you're in a job where you don't see any upward mobility for the next 7 to 10 years, that's not what we're talking about here. But what I am thinking about is somebody who can realistically look at their financial life, look at their career trajectory, and say, yes, these are unique times. I would like to get on this home ownership train, and I'm pretty confident that in 3 to 5 years, my income is going to be in a completely different place. And this is especially because we know the typical purchase price of age of a purchase of a first home in America right now is 33 years of age.
That's right.
That is not peak earning years. Peak earning years is in your late 40s, early 50s. There's a lot of years of range there between 33 to those upward 40s. I want you guys, I think this will give you the flexibility. But even if you can answer this question and say, yes, my income trajectory is on the upward scope, there's more you have to answer. The next question is, how much slack is in my financial life? And Bo, you can elaborate on what we mean by that.
Yeah, so there's a few different metrics to this slide. Here's the first one. Do you have an emergency fund in place? Do you have the money in case something goes wrong, and perhaps that mortgage payment that you thought you would be able to afford makes things a little bit tighter than you anticipated? Well, one of the things that you can use to offset that is your emergency fund, especially if you're someone who has that 3 to 6 months of expenses. It just gives you a little bit of a cushion and a safety net. The other question you have to ask yourself is, are you saving enough for the future? Are you saving the 10, 20, 25% for the future? And will this mortgage payment allow you to continue to do so? It's one thing if, okay, right now I'm only saving 20%, but my income's going to go up, so my housing will become more affordable, and I know I can save better. That's a different conversation than saying, oh, well, no, I was doing a good job of saving, but now that my housing is going to be 35%, I can't save anymore. I'm not going to be building anything for the future. I think if that's the circumstance, a bunch of red flags should go up. What you want to do is you want to be someone who has the emergency fund in place and you're consistently saving for the future, because again, if things get tighter than you expect, or there's an unknown that comes your way, you have a little bit of slack in the system that can help keep you protected and serve as a safety net.
And that leads to kind of that last part on this, how much slack is in your financial system. What happens if this goes bad?
That's right.
I want you to create a worst case scenario so you can go ahead and pre-plan, not have a shock and awe moment where if you lose your job or if you have some other hardship come your way and you go, whoa, what do I do now? You need to go ahead and have that all addressed. What happens if you can't make your mortgage payment? Do you have a system? Do you have the slack in your financial life to make up for that lost money?
And here's the last point. And when it comes to this, is the last thing to think about, and this is maybe the most important one.
Yeah.
Are you scared? If you're someone who's making the housing decision and you've listened to the show and you know that for the first time, it's okay to not put down 20%, but we really want you to be inside 25%. But you're saying, man, the only way I'm going to be able to get into a house is if I go above 25% of my gross income, then it should terrify you. And it should be terrifying in the sense that it motivates you to get back to that 25% as quickly as possible. Because if you are not scared of it, you are likely not considering it to be as serious as it is when these ratios get out of whack. Because it is very difficult to be a financial mutant if you're not actually living the financial mutant lifestyle.
Well, yeah, I mean, fear is a very strong motivator. I know in my own life, if you're waking up in the middle of the night because something's just not right, that can actually drive you to be a little more responsible, to have a little more pep, to try to get things, lined the way they are. And we know, look, there's a reason we focus on income trajectory, because you can grow your way out of this issue by having the good prospects that your income will go up in the future. The other side of this, y'all know where I'm going with this. You can either make more money or you can spend less money. And I know that is so hard in this crazy time right now, but maybe making more money could be side hustles. It could be taking on more hours. Spending less could be figuring out if there's unique things that you can do. But the big takeaway is that you are scared enough that you're trying to figure out ASAP, what's the exit ramp off of this outside of the 25% of my gross income exception that I'm taking advantage of right now, because we live in very unique times, so that I can get back into the good graces of following the financial order of operations just like it's supposed to. These are unique times, so we've created grace, we've created due diligence, we've created ways and non-negotiables that will protect you, but just do not skip a step in this entire process.